Okay, welcome everybody. I'm Howard Marks. I'm the CEO of StartEngine, and I have a distinct pleasure to introduce you our shareholder uh, and also advisor and spokesperson, Kevin O'Leary. Hi, Kevin.
Great to be here, Howard.
So I'm not going to pitch you a company right now. I could pitch you StartEngine if you'd like, but I'm not going to do that because I think you already know.
Already in, Howard. I'm already in. I'm a believer. You know that.
Okay, so you're in. That's good. What we would like to do is tell everyone here a little bit about what's going on with our raise and about StartEngine as well, and have a nice conversation between myself and Kevin, and then also answer your questions. And so myself and Kevin are very happy to answer your questions. So Max, who's going to be moderating the questions, is going to be giving us this opportunity. We're doing this morning because around 1 p.m. this afternoon, our time, we're going to be closing our offering. And it's been a big success, and we're very excited to see the enthusiasm. So I'm going to run through just a few slides. First slide here is a disclaimer slide, and we have to do that per the SEC rules to tell you about that we're going to discuss the offering, and then you have access to the link so you can see the offering. So I'll just pause a second and let you look at it and read it. I know it's all in caps. It's sometimes harder to read, but it's certainly very impactful. Kevin, you must have to do that with your companies, right?
Everyone, being compliant is paramount because being non-compliant is an incredible waste of time. That's basically what it boils down to.
Well, doing the right thing, one of the values that we have. Okay. Here's our agenda. We'll talk about our mission and values. We always do that because we want everyone to understand how our company operates, our funding, some important moments, and talk about secondary. I know that's something a lot of people are excited about. Okay, our mission, to help entrepreneurs to achieve their dreams. Our core target, that's aspirational. By 2029, we would love to be able to have raised $10 billion for our companies. Our values: own the mission, exceed expectations, be a team player, stay curious, do the right thing, care about others. So right now, this number obviously is wrong. We're past the 18 million. We keep changing it every 10 minutes, Kevin. You know, like, oh, it's another 10,000, another 50,000. I guess at one point we just stopped. So I'm looking at my phone right now, and I think we are at 18 million and 11,000, $100,000 or something. No, it's 18 million, 200,000. It keeps going up. So I'm going to stop right now. We raised to date over 32 million from the crowd, 18,000 new owners. So why we raise from the crowd? One of the things we think, and I heard Kevin say it many times, is there's nothing better than having your customers, your fans, the users of your service become your investors. So Kevin, tell us about it. Why do you think it's such a big idea?
Several reasons, Howard, that have obviously been discovered by the market and the crowd. Number one is you're aligning your interests with your advocates, which are your customers and shareholders that believe in your mission and your vision. But what's paramount to that is they don't have the same compressed time constraints that private equity, hedge funds, and venture funds have. Very often, a venture capital company raises a 5-year or a 7-year fund. And that may sound like a long time, but if you're a successful company that's growing, that goes by like that. And the key is all of a sudden their interests are no longer aligned with yours. They have to exit. They put tremendous pressure on liquidity just at a time when you're being very successful and growing potentially. So that's number one. Number two, the actual terms that venture capital firms, private equity firms, and hedge funds put out very often have very onerous preference attributes to them. So in other words, they're treated differently than any other shareholder. One of the great things about the crowd and equity crowdfunding is everybody is treated equally. Everybody is treated under the terms of the raise. There's no special preference to some venture guy, which I absolutely abhor more than anything else. I think that's so misaligned in terms of the long-term vision of a company, and why I'm so critical sometimes about the venture terms that I've been working with for decades. I'm not saying that venture capital isn't important, but we never had equity crowdfunding around 10 years ago. This is a new attribute brought on by the Jobs Act that you've obviously been able to build a platform on, Howard, and that's why I'm involved and an advocate. But let me tell you, it's very difficult when you're the CEO, the operator of a company, to have to treat one select group of investors as if they have a special right in perpetuity from everybody else, including your employees, including your customers. I don't like that. I don't like that at all. It misaligns the interests of the CEO and the operating team, and that is avoided completely in equity crowdfunding.
Yeah, I completely agree with you. The behind the scenes, which a lot of the times ordinary investors don't see behind the scenes, what it looks like and what those term sheets are, could be shocking to people. There's all these stories of entrepreneurs who have a successful company and ended up not making a penny. And it's very simple. What happened was they had a bump, they hit a bump, they ran out of money. The VCs came in with more money, put harsh terms on top of the common shares, and next thing you know, it's wiped out. And it's unfair. But hey, you know what? Now entrepreneurs have a choice. It is their choice.
Well, as it matures, as equity crowdfunding matures, it's becoming clear that you can start and maintain your fundraising in perpetuity with the crowd, which is really interesting. There are many companies, and you're well aware of them, Howard, that have started with a CF round for $1,070,000 and then gone on to do A rounds and continue to grow. And they keep the same shareholders. They keep them aligned. They keep them informed. They're totally transparent with them. I mean, of course, there's fees in every form of financing, but crowdfunding fees are completely transparent. There's no special preference secret arrangement that lets the VC out first or at some multiple term. I mean, that's the thing that we keep harping on. This is very democratic in the way that it allows you to raise capital. And you are beholden to your shareholders. When you raise money from the crowd, you owe them your very best work and the best return you can provide. And they watch what you do. And if you deliver for them, they're with you for your entire ride in your company. That's the beauty of it. Everybody's interests are aligned.
I couldn't say it better. I totally agree. That's why we are doing this. Part of the next slide I wanted to show is some of our momentum that we've had. We recently announced our revenue for end of June, the first 6 months, and we generated more revenue in the first 6 months than we did in the entire year of 2019. Even with COVID, which, as many people know, has changed business as we knew it previously, we've seen an acceleration of interest from prospective investors and people who invested in our offerings. So I don't know, these are the numbers that we've put in front of people. What do you think, Kevin?
Well, I think it clearly shows that equity crowdfunding, and particularly StartEngine, is gaining traction. The numbers don't lie. There's growth occurring, and more companies are taking advantage of the platform as they begin to understand it. It's still a neophyte strategy in the market. Most people don't know about it, but it has come mature now because significant amounts are being raised. I mean, StartEngine is $18 million. That's significant. I mean, if you wanted to go raise $18 million from the venture firms or the private equity or hedge funds, that would be a large amount. And so at the end of the day, the crowd has supported this initiative because they believe in it. And that's what happens. More and more people hear about it, word of mouth. That's the nature of the internet in the first place. And then the successes of these businesses. And if you're an investor, what really matters, and I'm a living proof of this, I have over 50 investments in private companies. I do that because I want a portfolio. I'm never sure who's going to be more successful than the other. I can't know that. But by building a portfolio, I mitigate my risk and I stay involved in a very important asset class that over time has had very significant returns. So it deserves to be in everybody's portfolio. And the best way to do that is to build a portfolio on a platform like StartEngine, where you pick and choose from every week's or every month's offerings. Things that mean something to you, or products or services that you actually use. You find your company coming on board and doing a raise and you already know that firm or you're intrigued by its mission. You can be an equity participant in that. and build a portfolio and stay on the platform. And Howard, I don't think, it's secret anymore that StartEngine will have a trading platform to provide liquidity for these positions. Why don't you give us a little detail on that?
Sure, absolutely. So just going through the next slide, which is exactly secondary. So now we can talk about it. Yes, we've been working for 2.5 years to get the right approvals. And we've registered our platform secondary with the SEC. So it's on their website now where they talk about the ATSs. And then we've been received from FINRA the approval. And that means what? That means that we can launch. We've announced that we're launching in October, our secondary platform. Well, guess what? We're in October. We're already here. The question is which date. So we're planning on a date, and I'd like to invite you, Kevin, to our opening ceremony, to open the first secondary platform for private securities. How's that?
It's great. I've been at many, many NYSE and NASDAQ openings and listings, et cetera. I'll be proud to be part of this one too. It takes its place amongst other exchanges. That's what I love about it. I mean, it's the evolution of the crowd. It's the evolution of equity crowdfunding and raising equity this way. And it's, the genie's out of the bottle. It's never going back in. It's just going to grow and become more important and more significant and more competitive. And once there's liquidity, so you can do, you can actually start trading these companies eventually. You can have liquidity in your portfolio, you can rebalance your portfolio. So I think there's a tremendous opportunity here, and I'm glad you've driven the ball home, Howard, because it's not easy to do all the compliance and regulatory work to make it happen, but it's an absolute necessity. If you're going to become the standard platform for this, people are going to want to look at their portfolio every once in a while and rebalance it, either buy new positions and brand new offerings or sell some existing ones, or both.
Yeah, absolutely, Kevin. So this is exactly what we would like as a brand, StartEngine as a brand, to represent to investors that some of the companies that will be on our platform will join our secondary platform. Hopefully more than some, we'll see. And that gives liquidity, and that liquidity will enhance the value of what those shareholders own, because they have the ability to sell and look at what the pricing is. Some people are probably very good at holding for a long term, and that's great. And some people are not as good as that. They feel that they need, some take some gains or some losses so that they can move on to something else. Typically, a private investment is 5 to 7 years. I had one personally, I'm talking about me, myself, an investment was over 20 years. I end up selling it, and I have to say, it was awful, because at one point the company was doing so well. Should have they been on the public marketplace, I would have done great, but they weren't, and they didn't want to. So should secondary exist at that time, I would have had a much higher return on my investment.
Yeah, it's not uncommon in any investment strategy to reduce exposure to your winners because they become a larger percentage of your portfolio. And the only way you can do that is through some form of liquidity where there's a market to trade. And that's what's happening here. So the StartEngine Secondary platform is going to be very, very important. I have my own investment philosophy. I never let a position become more than 5% of a portfolio, or no sector more than 20%. That's the definition of diversification, the only free lunch in investing. And now with the secondary platform on StartEngine, you'll be able to do that even over time with your venture investments. Portfolio is what matters. So to me, you need more than 10. That's what I think. I've got 56, but that's extreme, the nature of Shark Tank, obviously. But 10, because if you just look statistically, 2 of them are going to be just right out massive winners and are going to pay for all your mistakes, but you simply don't know which 2. So portfolio is great. A secondary engine upon which, or a platform that you can trade and rebalance, very, very important as the road goes down in terms of time. And I think that's what's great.
I agree with you. I think the portfolio theory is important. It's certainly important for all the investors to make their own decisions as to how they will invest their capital. What we at StartEngine want to offer is a marketplace of new issuances, which is what you see today. And as soon as secondary comes out on the marketplace, as soon as we launch it with our ceremony, we'll invite all of our owners and investors to join us for the ceremony. What we will hopefully have is more and more companies who decide, you know what? Not only I'm going to raise money on StartEngine, but I'll also allow my investors to trade. Now that to me is a significant improvement of what we've seen today.
What will be the first listed stock on the platform for trading, Howard?
So the first listed stock is going to be StartEngine, its own shares. And the reason is because we wanted to be the first. We wanted to show the way. We wanted to demonstrate that by putting our own shares on StartEngine with our own investors and our own community, that it would lead the way and show everyone else how it works.
Makes sense. I mean, it'll be kind of historic. The platform itself is the first equity to trade, and it makes sense, no question about it. But it'll be a big day because I think it'll have a wake-up call to the traditional forms of financing, not only the regular exchanges, the NASDAQs and the NYSE, et cetera, which are going through their own morphing right now as things like SPACs and other vehicles are used to finance companies, but also it shows that there's a maturation occurring in equity crowdfunding, and it's developing its own ways of providing liquidity. So it's here to stay, and it over time will just get bigger and bigger and bigger. And that's exactly what it should do. It's for the first time I've got companies in my own portfolio, as you're well aware, Howard, that have used the platform, specifically StartEngine, to successfully raise money and are now planning their next round, their A rounds.
Do you think those companies will also allow their investors to trade on secondary?
Undoubtedly. Everybody's waiting to see what happens and how it works and prove the technology is there and the platform does exactly what it's supposed to. But that's the challenge you have launching something new. And undoubtedly, there'll be some glitches. I understand that, as every electronic platform has. But it's the long-term vision that matters. And so part of the big objection that used to be there for equity crowdfunding was, where's the liquidity? I still need to wait for a public IPO or a strategic to buy it to get liquidity. This answers that question, and it's a very important one to provide. It's nascent, it's just starting, but it's the right direction, and that's what matters. So when you're starting to think about 2, 3, 4, 5 years ahead, which entrepreneurs should, because it takes at least that long to build a great company, they see liquidity being provided on the same platform they raise capital on.
And I'll share some interesting news. We talked to attorneys, and now some of the early investors in some of those companies who did not participate in a regulation, crowdfunding or regulation A, and they typically participate in what we call regulation D, it's a term, could also, with the opinion of an attorney, put their shares on the marketplace after holding it for 1 year. That's pretty significant.
Yeah. I mean, I think the regulators also see the vision. They want to provide alternative financing for startups to democratize it so that everybody can participate. It has been a good asset class over the decades if you take a portfolio approach. And most VC firms do take a portfolio approach, but obviously they try and garner excessive terms that benefit their LPs, their limited partners, over the traditional common shareholder. And that is one of the reasons I got involved in this. I want to democratize that because I have lots of companies that want to raise capital, and I'm one of the original founders, and I look at the term sheets, as you said, secret term sheets, and I look at them and I say, no, 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 no way. Not if I have a say in this. I'm not putting them ahead of me. I seeded this company from the beginning, took all the risk, and now you want to bring in some Johnny come lately that gets better terms than I do? No, that's not going to happen. And so there's always that tension between the original founders and the VC that wants the preference share, and this is eliminated with this strategy. And it also deals with the fact that when you want liquidity, whenever you want liquidity, down the road, you're going to be able to get it.
That's right. So I'm going to unshare my screen right now. And what I like to propose is we answer some of the questions. Max has been moderating them. If you would like to ask a